Hello, everyone, and a huge welcome to you. We're so glad you could join us today for the video.
Yeah, thanks for tuning in.
If you're tracking the brokerage space, or you just, want to follow the flow of what seems to be the smart money, you are definitely in the right place.
You are.
Because today we are breaking down the Q4 2025 earnings call for Interactive Brokers Group. That's ticker IBKR.
And what a quarter it was. We had the whole management team on the line, CEO Milan Galic, the CFO Paul Brody, Nancy Stubb, and of course the founder, Thomas Peterfy.
Right.
And I'll just say this up front. If you thought falling interest rates were going to, hammer brokerage profits, IBKR just basically told the entire market to think again.
That is exactly where I wanted to start. The whole narrative for the past couple of years has been pretty simple, right? Brokers were making a killing because rates were high. They were sitting on client cash, collecting 5%, paying out less, but now rates are coming down. So the simple logic says their earnings have to drop. But looking at this report, they didn't.
Not even close.
Yeah.
In fact, let's just unpack the headlines from their prepared presentation first. They posted their fifth straight quarter of adjusted pre-tax income over $1 billion.
$1 billion.
$1 billion. And net revenues for the full year, 2025, they topped $6 billion for the very first time. I mean, the story here isn't just growth, it's resilience. They somehow managed to offset those interest rate headwinds with just sheer volume and activity.
So let's talk about the scale of that activity then. I saw client equity hit $780 billion. They're knocking on the door of $1 trillion in assets.
It's a 37% surge year over year.
Yeah.
And they added over 1 million net new accounts in 2025 alone.
Wow.
But here's the stat that I think really matters. It's not just about how many accounts. It's about who these clients are. The CEO, Milan Galic, he dropped this number that I think defines their whole business. He pointed out that in 2025, the S&P 500 was up about, 17.9%?
Which is a very good year for the market.
A great year. But the average individual investor on their platform was up 19.2%. And their hedge fund clients,
Uh-oh.
they were up nearly 29%.
That is a massive delta. I mean, usually you hear that retail investors underperform because they chase trends or overtrade. Galic is basically saying the smart money lives on IBKR.
Exactly. It validates their whole brain. They aren't trying to be that, gamified app with the confetti when you buy a stock.
Right.
They are building for the sophisticated user.
Right.
And to keep those users, they've been pretty aggressive on the tech front. They rolled out a new Global Trader 2.0 for mobile, and they finally launched a Linux beta for their desktop app.
Which I'm guessing the developer and the algo trading crowd has been screaming for.
For years, yeah. And they're integrating AI with this new tool called Ask IBKR.
Okay, so is Ask IBKR just another customer service chatbot?
No, and that's the key thing. It's for portfolio analysis. The whole idea is you can query your own financial data in just plain English. So instead of running some complex report to see your exposure to, say, Asian semiconductor stocks, you just ask it.
What's my exposure to Asian tech?
Precisely. It's all about speed for serious traders.
And they're also expanding the map, right? I saw they're opening up markets in Brazil, Taiwan, UAE, Slovenia. It seems like a very, very global footprint.
It is. But before we get too lost there, we have to touch on the CFO's numbers, Paul Brody, because he highlighted something critical for the bottom line. Despite those rate cuts we talked about, net interest income was still nearly $1 billion.
For the quarter.
For the quarter.
Okay, I have to push on that. If the Fed cuts rates, that number should go down. It's just math.
Well, it is math, but it's
It is.
complicated math. First, commissions. Their commission revenue hit a record $582 million, up 27%.
So that's the natural hedge.
Yeah, that's the hedge. When rates drop, markets get excited, volatility picks up, and trading volume spikes. That volume generated enough fees to sort of buffer the drop in NII. Plus, they run an incredibly tight ship. Headcount only grew by 6%.
That's that operating leverage we always look for. 27% revenue growth on 6% headcount growth. The margins must be beautiful.
And the balance sheet is a fortress. No long-term debt, and firm equity is over $20 billion. But look, prepared remarks are always the victory lap. The real story starts when the analysts start poking holes in the Q&A.
Okay, let's get into it. The Q&A is where we find out if they're actually confident or just good at reading a script. We'll go through these one by one. First up was Brennan Hawken from BMO Capital Markets.
Right, and Brennan went straight for that interest rate issue we were just talking about.
Yeah, he asked about customer credit balances and why the yield paid to customers didn't drop as fast as expected. He wanted to understand the beta on their deposit rates. Basically, if the Fed cuts, why isn't IBKR cutting what they pay clients right away?
And the CFO, Paul Brody, he explained it as a repricing lag. So think of it this way. IBKR invest all that client cash in short-term securities, right?
Okay.
Well, those securities have a tail. They haven't matured yet, so they're still paying the old, higher rate. But IBKR pays clients on an overnight basis. So for a little while, they can lower what they pay clients while they're still collecting the higher yields.
So they actually widen their margin for a short time when rates start falling.
For a brief period, yeah.
Well,
But Brody was quick to add that margin lending volume was so strong it just outweighed the rate drop. It's a volume game. Now, Brennan had a follow-up, and it was a big one.
yes, the bank charter application. The public comment period apparently ended on the day of the call. He wanted to know what the impact would be if it gets approved. I have to ask, are they trying to compete with, like, Chase or Wells Fargo? It seems like a huge distraction.
That's what I thought at first, too. But Milan Galick clarified the strategy. It is not about retail banking at all. It's about custody. Right now, as a broker-dealer, IBKR can't be the custodian for assets like mutual funds or ETFs.
Ah, I see. So if you're an investment advisor using their platform, you can keep stocks there, but your clients' mutual funds have to live somewhere else.
Exactly. And that's friction. If they get this charter,
Yeah.
and they hope to be operational by late 2026, they can custody everything. It makes their platform so much stickier for those high-value RIA clients. It just fills a hole in their offering.
Okay, that makes a lot more sense. It's an infrastructure play, not a consumer one. Next up, we had Patrick Molley from Piper Sandler, and he brought up what I think is the most fascinating part of this company right now.
Prediction markets.
Prediction markets.
This is where Thomas Peterfry, the founder, he really leans in. Patrick mentioned all the buzz around sports betting. There was a recent court ruling about a competitor, Kelce, that could open the door for betting on, NFL games and things. So Patrick asked, is IBKR going to let us bet on the Super Bowl through their ForecastX platform?
And Peter Pfaffy shut that down pretty fast, didn't he?
Hard stop. He said, and I'm quoting, "We're not going to buy a firm that is doing sports betting," and they aren't building it either. He was very, very clear. ForecastX is for consequential predictions.
Consequential.
Economics, climate, policy, things like that.
It's interesting positioning. They want to be the CME of predictions, not DraftKings.
That's a great way to put it. It's a financial instrument, not entertainment.
So Patrick Molley followed that up with a question about their huge pile of cash. He asked if M&A was on the table, maybe buying a prediction market firm.
And again, Peter Pfaffy was blunt. Since they aren't doing sports, why would they buy a sports book? Milan Galick then added that their own platform, ForecastX, is growing just fine organically. I think he said 10,000 instruments,
Yes.
204/7 trading. They just don't see a need to buy anyone.
Okay. Next up was James Yarrow from Goldman Sachs. He was looking overseas and asked about them getting a European banking license.
Right, and this kind of goes back to that custody play we just talked about.
Mm-hmm.
Milan Galick said they haven't started the process yet. It's not urgent, but he said it'll happen eventually. And he actually pinpointed Ireland as the likely spot since they already have a regulated broker there.
James Yarrow then came back to prediction markets for his follow-up, but from the institutional side. He wanted to know who is actually using them and when this market is really going to develop.
And this is where we got a really concrete example of what Peter Pfaffy means by consequential. He explained that right now, temperature contracts are the most traded.
Explain that to me. Who on earth trades the temperature?
Utility companies. Imagine you run a power plant. If you get a surprise heat wave, everyone cranks up the AC, demand for power spikes, and the price of energy goes through the roof.
Okay.
You need to hedge that risk. Peter Pfaffy wants these utilities to trade temperature contracts on ForecastX to hedge their real-world weather exposure.
So if it gets super hot, they make money on the contract, which then offsets the extra cost of generating power.
Exactly. He said he expects to start onboarding these utility clients sometime in the course of the year.
That is a huge shift. It takes prediction markets from being kind of a novelty to a genuine corporate hedging tool. All right, moving on, we had Craig Siegenthaler from Bank of America. He wanted to talk about crypto.
Yeah, fair question. He basically asked if individual investors really want crypto from IBKR.
And what was the answer?
Honestly, Milan Galick gave a refreshingly honest answer. He admitted crypto revenue is, quote, small relative to the whole firm. He knows the real hardcore crypto traders are, on Binance or Coinbase.
So why even bother with it then?
It's a defensive move. The investment advisors on their platform, they needed it to round out their offering. If a client has 2% of their net worth in Bitcoin, the advisor wants to see that on the same screen as the Apple stock. If IBKR doesn't have it, that advisor might just look for a platform that does.
It's table stakes. You just have to have it, even if it's not a big moneymaker. Craig's follow-up was about that monster growth rate we mentioned, 30+% account growth. He asked Thomas Peterfelli directly how long he can keep that up.
And this was probably the line of the night. Peter Heffed just said, as long as I can live.
You have to love the confidence.
I mean, yeah. But underneath that bravado, his point was that this growth isn't a fluke. It's not based on some marketing gimmick or a sign-up bonus. It's based on having a better product at a lower price. And he thinks that advantage is permanent because of their technology.
Okay, next question came from Dan Fannin at Jefferies, who is looking at expenses. He wanted to know if investment spending is accelerating.
Milan Galic said expenses are pretty consistent. Headcount grew 6%, compensation up about 10%. They're adding staff, but cautiously. He did mention AI initiatives might affect future spending, but the overall trajectory isn't really changing. They're not just opening the checkbook because they had a good year.
And Dan's follow-up was trying to pin down where all these new accounts are coming from.
Right, geographically or by sector. And you expect them to say, oh, it's all Asia or it's all small retail.
But that wasn't the answer.
The answer was universal. It's large accounts, small accounts, hedge funds, advisors, all over the world, which is actually harder to do than it sounds. It means their platform is flexible enough to serve a kid in Taiwan on his phone and a quant fund in London running algorithms.
Next, we had a question from Benjamin the Buddhist from Barclays.
Yes, Benjamin asked about the U.S. midterm elections coming up, wondering if that would, quote, juice growth, and if they plan to up their advertising spend.
Elections definitely drive volume, so what's the plan?
Peter Rafai confirmed advertising is key. He said they are increasing their ad spend and, importantly, that they are getting better at it, very data-driven, and he just reiterated his confidence, saying, we will not let our account growth go lower.
Benjamin had one last follow-up on institutional prediction markets. He asked if getting insurance companies and utilities on board requires new products, or if it's just about education.
And Peter Fisher was very clear. He said, it is not a product design issue. The products are there. It's strictly a matter of salesmanship, getting out there and selling the idea to the companies that need it.
So it's a sales game now. Okay, that wraps up the play-by-play. Let's try to zoom out here. We've gone through the numbers, the Q&A. If we're distilling this down, what are the main themes you think we should walk away with?
I think I see 4 main pillars here. First is just unstoppable growth, record revenues, record accounts, and they are not doing it with gimmicks. The leadership is just incredibly confident that this organic growth engine is built to last.
Which leads right into the second theme, which is strategic expansion.
Exactly. They are not just a stockbroker anymore. They're pushing hard into prediction markets with Forecast X, aiming at really sophisticated users like utility companies. And that U.S. bank charter. That is a long-term play to capture assets they just couldn't even touch before.
It's changing what it even means to be a broker. And theme 3 has to be their tech lead.
Absolutely. Global Trader 2.0, the Linux beta, that new Ask IBKR AI tool, they're just constantly upgrading to keep the platform sticky for both the pros and the serious retail traders.
And the final one?
Discipline. It's the boring one, but it's so important. Expenses only grew in line with inflation while revenue just skyrocketed. That discipline is why they have $20 billion in equity and no debt.
It really is a machine. Well, that brings us to the end of our analysis of the Interactive Brokers Q4 2025 earnings call.
It was a fascinating quarter, not just for the numbers, but for the strategic moves they're setting up for the future.
I really want to thank all of you for watching the video. We know you have a lot of choices for your financial content, and we really appreciate you spending some time with us.
We do. Thank you.
If you found this breakdown helpful, please do us a quick favor, click like, share the video with a friend or a colleague who trades, and of course, subscribe to the channel.
And stay tuned. We have a lot more content coming your way very soon.
Thanks again for watching, and we will see you in the next one.